Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Thursday, June 18. The year's 2020. Let's talk trading. Do not break your rules, part 2. Walmall and we had a lot more to say about it. But before I get started, welcome to the channel. And if you haven't subscribed, click the subscribe button and click the like button, please. And you can click the bell to be alerted when I put out the next video. And then you also go down and hit share and share this video all over the internet. I usually do that at the end, but somebody said I should do that at the beginning, so I remembered to do that today. Now remember, fellow traders, these videos are for educational purposes only. Your results may differ from mine. Trading is extremely risky, and you can lose all of your money. If you need trading, investment, or financial advice, seek the advice of an accredited financial professional. So, Walmall, back to not breaking the rules. You said there were some things you wanted to add on.
Well, one of the things I was thinking about is, you had that famous song, from back in like 1972, 73, 74, something like that, Billy, Don't Be a Hero. And I think sometimes we're looking at the charts and we're trying to be a hero, and the reality is we've got to trade what we see, trade what we know, trade the plan that we have. And, we can't go and trade what other people are doing. We got to go and trade what we know. And that's part of not breaking the rules. In other words, sit down, spend the time, study the charts, learn the charts. The charts are a living organism. I've said that many times on these videos, but that's what we have to do. And once you've done that, then you can say, okay, this is how I am going to trade this chart or this instrument to make money. And once you figure that out, and once you actually see, hey, I'm making some money here, you start writing down those rules. In fact, you should be writing down the rules right from the beginning and just cataloging them, and by doing that, you know that you're making money. And, in the last video, I had said something along the lines of, inconsistency is what causes you to be a loser, because what happens is you wind up going and trading one way this day and one way that day, and next thing you know, you're changing methods, you're changing stop losses, you're changing this, you're changing that. And all I know is that from my perspective, from my journey into becoming a profitable trader, that's the thing that killed me more than anything else. That was the thing that caused me to slow down in my learning process more than anything else. Because I started trading, I was trading the method du jour of the day, and so today I'm going to go and trade this method. Tomorrow I'm going to trade a different method, and probably the day after that I'm going to trade a third different method. No, find your method, make your rules, follow your rules, stick to your rules. You don't have to be the hero in all of this. You don't have to do all that. What you need to do is just be profitable. And once you follow your rules and do that, you become profitable. And I know, Tiro, you say this all the time, and it's so true. Trading can be boring. Because if you're trading right, it's boring. You go into the trade, you either win it or you lose it. And then you sit on your hands and you wait for the next trading opportunity. And you get into the trade, and you either win it or you lose it. And then you sit on your hands and do it again. It's just, rinse, wash, repeat. That's all it is. That's all trading is. But where we get into trouble is halfway through the trade, or halfway through the trading day, we change our entire method around. And that's just craziness. When you do that, you're in trouble, and it gets you into trouble. And next thing you know, you're wondering, hey, I was up 10 pips for the day. And now I'm sitting there, we're looking at my account with our hands wringing our eyes out, because now we're down 20-something pips because we tried this method because, we're trying to be a hero and make the most number of pips we can.
Yeah, that's for true. And, one of the things, about trading your rules and not breaking them is the stop loss. It's huge. And the reason it's huge is because it's one of the few things that you can actually control when you trade. You control when you decide to get into the trade. You control which market, which instrument you're trading. But once you put the trade on, the only thing you can control is how much you lose. Because if the market doesn't give you an opportunity to win, you're going to lose. And you get to control that. And so you have to make sure you put that on. Because if you don't, then the market will take things away from you. And you've seen the simple, the price action screen I have up here, and I had switched it to M1, but let me switch it back to 1 hour so I can pretty much prove the point. Now, we just made a video last hour, and we had so much we decided to put out a part 2 today. Right here at 30 was the Walmart line. You still in that trade, Walmart?
I just got out because I used my 10-5-1 method. So what happened was I got up and I was profitable by 9 pips. It came down and hit my 5 line, so I got out.
I thought it had to hit 10 before you put the 5.
Yeah, I broke my rule, but it was so close that it's like...
you see that? He broke his own rules while we're talking about not breaking your own rules. Now that's funny.
The thing is, you said this earlier, the idea that, got to be real. Because, you know what, there's emotion, there's real money on the line. And so I just looked at this thing, and I was up 9 pips, and then it came down, and it hit the 5. Normally I wanted to hit the 10 before I go and move that stop loss to that spot. But, that's just what I did, whether I like it or not, now I got to live with it. So,
you see, Walmart just got busted live.
I did.
See,
but at least I got busted live with tips in the bank.
Yeah, exactly. As opposed to, getting busted live and taking a loss. In fact, another thing Walmart and I were talking about is that you can manage the trade by looking at the chart and letting, chart patterns or indicators on the chart, squiggly lines, whatever, tell you to exit the trade. Or you can do like my buddy Airball, shout out to Airball. What he's doing is he gets in the trade, and once he gets into the trade, he doesn't look at the chart. He looks at his P&L, and when his P&L hits a certain amount, he's out. And he goes, that's the lesson he learned. He goes, I don't care what happens next. I don't care if it runs to the moon. It doesn't matter. He has his plan, and he's sticking to it. And the other thing about your plan is, your plan isn't necessarily carved in stone, but then you don't draw it in sand and let the waves wash it away either. You have a plan, and you take 10 trades, and then you look back and you go, is there anything I could have done just a slightly bit different that may have given me, a little more profit, or would have, I would have, instead of being a loser, that would have been a winning trade. And so you just tweak it just a little. You just a slight modification, as opposed to a complete overhaul, or, I'm going to add another oscillator into the mix. So I've got MACD and stochastics, they're in congruence along with the Fibonacci lines based on 17 different time frames, or some of that kind of nonsense. I've got 27 moving averages in a rainbow, so I can see whether or not price is turning. Oh, and by the way, the actual price, that's irrelevant. I'm just looking at the rainbow. I mean, I've seen it all. It's some of the charts. In fact, over there where I like to post, we have a one of the threads is, I think it's called Charts on Drugs, because whoever the trader was that created that chart, it's like they pretty much had to be on drugs, as far as I'm concerned.
Yeah, and that's an important thing to go and recognize, and that is, we do need to keep it simple. We say this all the time, and that is that price is doing, one of two things. It's going up or it's going down. Okay. Now it can range, but even when it's ranging, it's either ranging to the top side of the range or to the bottom side of the range. So it's either going up or it's going down.
Right.
And so the reality is, do you really need all those things on your chart to go and see that it's going in that particular direction or not? To see that price, see that price action. I don't think you do. And that's what I love about your indicators, because most of them are completely statistic based. So, like for instance, right now we're looking at the hourly candle. The hourly candle right now has moved 14 pips. That's 9% of the range that an hourly candle usually moves. I also see in my chart, by looking at those statistics, that the lowest amount that is range today is 29 pips. That tells me this candle has a very high probability of moving another 15 pips at least. that tells me, if I was on the top end of this candle right now, I should be sticking because I got the possibility of going more. Do I know for a fact it's going to do it? No.
Yeah.
But it's a probability.
And the thing is, though, if you look at the price, it's now back down to 31. Now it's at 30. So you got you went from 30 to 39, and you punched out at 35. You took the money off the table. Otherwise, the market would have just taken it back, right?
Right, exactly. Now, I don't mind that. That doesn't bother me that much that happens. I know that drives you nuts and insane, TRO, but for me, with my 10-5-1, if I didn't get the trigger to go and move my stop to 5, well, that's just too bad. Well, guess what? I guess it affects me a little bit too.
Yeah, because if you had left it alone, then you would have just stopped out, and you would have left 8 pips on the table. You wouldn't have been happy. I know I wouldn't have been happy. So that's one of the things that when you're setting up your rules, you don't break them. But as Bruce Lee would say, or actually, no, that wasn't Bruce Lee. Actually, it was like you have to obey the rules till you learn how to break them. I think that was Bruce Lee. But then in the Matrix, some rules can be bent and some rules can be broken. So, if you're up 9 pips and if you're kind of hoping for 10 to move that stop, and it starts, all of a sudden you're up 8, you're up 7, you can make that decision in real time. I'm taking my money off the table. And it's like, I'd rather have, 5, 6, or 7 pips than getting stopped out with just 1 pip. And sometimes it's going to work in your favor, and sometimes it's not. But, in your trading journal, you could make in the notes column, you go, I exited this trade because, price was so close, but it obviously from the chart, it told me to get out. And one of the things we had also talked about in between making these videos were some people will, when they first start, they'll have the chart and they'll put all kind of lines on it saying, I'm going to go long here, I'm going to go short here. And that's one method, that's pre-planning. Whereas Walmall and we do things in real time, dynamically, based on the statistics, because we know if X happens, then chances are Y is going to happen. Based on statistics, we don't have a crystal ball. If we did, the market would be gone because we'd own it all. And so some people might say, well, you're just trading by the seat of your pants. It's just like, no, this stuff, we know in advance if X happens, we're going to do Y. But we don't know if or when X is going to happen. That's why there's a lot of wait time.
Right. And it's funny because there's been a couple times you said to me, what's your bias for the next hour, long or short? And I've said to you, well, what's the color of the candle going to be? That's my bias, because I know that statistically, if I trade in the direction of the hourly candle, I will be right more times than wrong. And, that's my bias. Now, there are all types of other biases that you can put out there, based on fundamentals, based on, different types of technicals. And that's great for those folks, but that's not the style that I'm trading. That's not the style I think that you're trading either. But, and there's nothing wrong with that other method of doing it if you make it your own and you learn how to do it. But for me anyway, this is what works for me. And I'm not going to go and start trading, changing my trading rules and my trading plan and start trading against what I have found successful. That'd be nuts. So I'm going to do what I can do. Now, if some point in time in the future, all of a sudden, this doesn't work for some reason, well, yeah, of course. What do? You stop, you look, you listen, and you go and figure out why isn't it working. Have I deviated from my trading plan, or do I need to go and rerun the statistics? Maybe the market's changed so much that the statistics aren't accurate anymore.
Yeah, and look at that. Another fast 15 minutes went by. But, look at this candle from when we started. I mean, it was up almost, 9 pips now. If you were in that trade, and you didn't have your stop loss hadn't moved up, you'd be 4 pips underwater. So, fellow traders, that just goes to show it's not what you trade, it's how you trade it. So go out there and drain the banks. And once again, welcome aboard, new folks. And the Rumpled One is signing out.